Happy bloody Friday the 13th. Oh man, we have a lot of stuff to talk about. If you could do me a really big favor, only if you enjoy my content, smash the like button and subscribe for more if you want to see me every day of your life if you choose to watch my content. Tomorrow I'm going to be making a very special video talking about SoFi versus PayPal. In the terms of what if hypothetically PayPal gets bought out. And you want to know what? SoFi, that's not off the table too. SoFi's market cap is actually much cheaper than PayPal. So you got to keep that in your mind also, especially if you are a long-term shareholder like me in SoFi. I will be talking about SoFi a little bit in this video, but near the end per se. Right now, before getting into Adobe's earnings, I want to pull up some economical data that just came out. And oh boy, it is a doozy. It's a major doozy. So here we go. Okay, GDP. Let's start with you first. GDP is falling off a cliff. You're talking about GDP is now at 0.7%. PCE, very important, a inflation report. Now, for the last couple of years, if you've been following the market like me, unfortunately, and when I say unfortunately, I mean with J-Powell, Jerome Powell, the guy loves PCE more than he loves CPI and also PPI. And he stated this so many times through press conferences, just overall meetings. A couple other Fed members too, they also prefer PCE. So what does that mean? That means hypothetically, if CPI comes in maybe in line or a little bit above expectation, but PCE comes in below expectation, they're going to look more at PCE for rate cuts rather than look at CPI. And how does this benefit the broader market? Well, it benefits SoFi tremendously for a potential rate cut, and it also benefits the entire broader market if it's going to be getting a rate cut too, right? So GDP went down, which is bearish for the U.S. economy, but bullish for rate cuts. And then we also have inflation going down, which is bullish for the economy because inflation's going down, but it's also bullish for rate cuts as well, because then the Fed can lower a rate cut, give us a rate cut, and not have to worry about inflation. The problem is that this data is from the previous month. Previous month, oil wasn't spiking to the moon. So we got to be waiting once again another month to see what this stuff, such as oil and the stuff going on in the Middle East, is really going to, be doing and stuff. One more thing that I do want to pull up here that I do actually follow, and I do take this with a grain of salt, and honestly, so should you. If you do follow me, understand that I'm not a FA financial advisor. I'm just a retail-loving, stock market baboon, just like any other retail shareholder, right? The AI sentiment came out yesterday, or I should say 2 days ago here. And this is very important. I actually like this one more than the Fear and Greed Index by the CNN. And by all means, this is all just really algo-driven. Like, I've personally never been polled. Every presidential election that I've been around for, or that I've been old enough to vote in, I've never been called. I've never been, surveyed. So I really wonder where they get all this information from. But as the bullish percent increases, that is, as the bearish percent increases, that is bullish. Why? Because when more and more people are becoming bearish on the market, that signals that a bottom is potentially near. You got to remember how the market works. Okay, if you've been around the block for a while, I've been in the market now since Rona. It was absolutely chaotic then. And then I also survived 2022 as well, too. The market, when everyone is looking in one direction, the market does the opposite. Everyone is bullish, the market goes bearish. Everyone's bearish, the market goes bullish. Everyone is mixed. That is typically like the best. A little bit of bullish, a little bit of bearish. the market tends to do just fine, okay? Pretty much, I believe it was 2024 that was the case. The market did amazing. Now, a lot of Wall Streeters said that 2026 was going to be another banger, like the last 3 years with double-digit gains. The end of the year is not here just yet, but it's pretty funny. The Wall Streeters literally were all bullish about 2026, and we're experiencing a lot of pain in the market. A lot of pain, okay? So this is something that I'm going to be paying attention to. 1 year ago, during Liberation Day, 61% was bearish, and then we bottomed. You got to remember this. When everyone is screaming they can't take the pain anymore, and we're just going to continue to go down and down and down, that's when you know a bottom is either there or about to be there. Very important. Okay, so I want to talk about my glorious position in Adobe. I have acquired Adobe on 2 profiles. One is my channel public profile on this YouTube channel that I'm doing. I'm doing an account challenge for anyone new. Welcome if you are new. And also my private profile. I've been buying big into Adobe. SaaS apocalypse has been utterly just... I understand about a lot of fears in this market, but I really truly feel that the SaaS apocalypse was probably one of the dumbest and also one of the biggest generational buying opportunities in software names you can have. Pick and choose what one you want to dabble in. You want to go in for the top banana of Microsoft? Sure. Microsoft is down the last couple months. Big. I believe Microsoft is down by 25%-ish. Salesforce, CRM, they're also down big. Then you got Adobe. And this is also hilarious. You also got Palantir following SaaS. But Palantir is also in a weird bubble because the reason why software companies are selling off is because they're fearful. The market is fearful that AI is magically going to make them go away overnight, right? Or obviously not go away overnight, but basically that the revenue growth is going to slow down over the next couple years because of AI. However, it very well could be the opposite. Do I believe it's going to be the opposite? Call me crazy, but I do. I believe AI is actually going to propel the earnings of software companies because these software companies are going to be able to use AI to integrate in their business model. Yeah. Not to mention, you look at an ecosystem of Adobe. I use Adobe products practically every single day. I run other YouTube channels. This is fairly a new YouTube channel here, so let's try to get it to over 200 subs now. I'm growing it organically. I haven't advertised this channel among my other channels just yet. My main YouTube channel has 200,000 subscribers. NightmareRH. It's a gaming channel. But then again, the stock market is one big gaming channel too, if you think about it. Palantir falls in to software, but not fully into software because they are an AI software. It's all about Palantir's growth rates. The market does not believe that Palantir can maintain its very rich growth rates that they are putting up. So a lot of people are, sayonara, leaving that got into Palantir at such a very young price, very early price, in the single digits, double digits, maybe low 3 digits. A lot of people are rolling out of Palantir and maybe rolling into other names. So that's really the SaaS apocalypse. It is so overly just blown over. Now, as for SoFi in the market right now, we do have a little bit of green. It is 09:25 a.m. The market is not even open. I'm actually going to be filming as the market opens, which is going to be good. But I mean, the VIX is still relatively, it's still relatively high. Oil is still relatively high. The market has just very much not recovered at all from, one, the SaaS apocalypse, and two, you also have the market understanding that rate cuts are more than likely not going to be very big among 2026. And then on the flip side, you also have Iran, the Iran war, which is honestly now you can call it like a full-blown like war. It's not necessarily a conflict anymore in a lot of people's opinions, which you can very much say is factual. It's legitimately like a war now. And nobody knows when it's really going to end. If it's going to be something quick or if it's looking like it's going to be here for a while. So the market has to price that in. However, Adobe, let's go ahead and talk about Adobe because there's a lot of things that came out. So Adobe's earnings just came out last night. A lot of things I want to pull up on the screen here. So let's go ahead and start with the first thing here. Let's go ahead and look at just a basic chart. Oopsie daisy. What are we doing? Hold on. I gotta go ahead and get rid of some other charts. Let's go ahead and look at some quarters here. Revenue, non-GAAP EPS, year over year. So revenue year over year, they're growing. Okay, it's a growing company. Is it growing at the rate as SoFi? Hell no. Is it growing at the rate as AMD? Hell no. Is it growing at the rate of Palantir? Hell no. The company is growing. Is it growing more than PayPal? Hell yeah, brother. PayPal only grew 4% year over year. So, firstly, look at this. If you are an Adobe shareholder like me, and you have over 5 figures invested into Adobe like I do, look at this. Year over year, the company grew. The company is profitable. Right then and there, boom bang, the company is straight up growing. It's a yes or no question. Is the company growing year over year? Yes or no? No, it's not a maybe. It's a yes or no. Is the company growing? Is PayPal growing year over year? Yeah. Even though the stock price has been obliterated, yes, fundamentally the company's growing. Fundamentally, Adobe is growing. Okay, that's the first piece right then and there. Let's look at the second piece. Actually, I want to show this chart over here. Let's go ahead and look at Adobe's earnings once again on a different type of a chart. Revenue, year over year. EPS. So why is EPS growing more than revenue? It's because they're doing a share buyback. Okay? So is this good? Is it bad? Well, if you're a long-term shareholder, that's actually very bullish. It's bullish that the company is taking chips away from the market. Doing a share buyback shows, one, that you are sitting on extra cash that you feel safe about. And it also signals to shareholders, hey, we got your back. We understand the stock price is very wonky, but we got your back, and we're going to be taking chips off the table. So that's number 2. Lastly here for this another chart as well too, just another visual. This is quarter over quarter. EPS once again much greater quarter over quarter, and the revenue. Hey, the revenue didn't drastically beat the previous quarter, but once again the company is growing. It's a yes or no question. Are you invested in companies that are growing? If you can say yes, like Adobe and I am, then cool. You know, hey, does it fit your investing, trading strategy? It does for me. The last thing that I'll go ahead and say about Adobe here is the CEO, after 18 years, is pretty much calling it, hey, the bag. The CEO is going to be remaining on the chair of board of directors, and the CEO is going to be the CEO until he finds a replacement and until he trains that replacement. So that is very big key words, although it's kind of really shaking up a lot of the market here. Okay, yeah, Adobe, obviously, we're actually lower now than back a couple weeks ago. But why is it shaking up the market, and also why shouldn't it shake up the market? Firstly, am I bothered that the CEO of Adobe is going away? No, it's because of what he said. Okay, if you actually listened to the earnings and actually understood what he was saying, you're gonna understand what happened. The guy has been a CEO for 18 years. Adobe has now had 3 CEOs. Yes, Adobe has been around the block for a very long time. 3 CEOs. I'll say that again. 3 CEOs. Has Amazon not had their different CEOs? Has Microsoft not have their different CEOs? What about Apple? Has Apple not had their different CEOs? Someday, honestly, Tesla very well may get a new CEO. Someday, now, do I believe Tesla is going to be very much different? I do. Because Musk leaving on Tesla, that is the equivalent of, drawing a blank here on Apple. Oh, Lord. Oh, man. He ended up passing away. Rest in peace. I'm drawing an absolutely huge blank. Founder of Apple. Ended up passing away. I believe it was pancreatitis cancer. Apple went through a very, very bad phase. And I remember it was headlines everywhere. Everywhere. It was headlines, right? The CEO of Adobe, not going to try to pronounce his name, he has been with Adobe since the cloud era has basically been around. So the last 18 years. Adobe has had 3 CEOs now. Hold on one second. I honestly thought I had a screenshot here, but apparently I didn't. Hold on one second. Hold on. Got to pull this up here. Watch the market here. Yep, here we go. Okay. I got it. We got the screenshot. Actually, Adobe's turning a little green here. Yeah, that's right. And did I buy some shares of Adobe last night? I did. Okay, here we go. So, first CEO and founder of the company, 82 to 2000. Adobe has been around the block for a very long time, like I said. Then you have the next CEO, not really around the block for a while. PDF dominance, that was very big. And then, obviously, the most recent CEO, right? You have Adobe around $100 billion of a market cap. I believe it's like 111-ish. Hold on one second. Come on. Technology is very slow. 104 billion of a market cap. Since the first CEO left in 2000, has Adobe not gone up? Adobe has. So I'm going to leave this on a closing note here, okay? I'm going to leave this on a closing note that as an Adobe shareholder, I'm not worried about this company in any way, shape, and form. Am I going to be buying more shares? So I'm actually probably more than likely not going to be buying any more stock across the market until probably April. And the reason being is because if you've been following me, I've been buying stock left and right for the last couple months. I honestly don't know if this is just a little up and then bigger down, because it's seeming like the market wants to just do one big hard boom down before we do like a big up. I really hope that's not the case, and you want to know what? If that is the case and we're just going to go up from here, hey, I have my positions built. I've been picking up bonus shares for the last couple months now. I'm good. But if the market goes down, I'm going to go harder on buying. But we have way too much stuff going on right now in the market. Way too much. Okay? We got to get some more clarity on what is going to be happening with Iran. Hopefully there really aren't going to be any ground troops going in. Hopefully this is going to be over very soon. And unlike the Iraq and Afghanistan war that's pretty much taken place, and also Vietnam as well too. But on a super closing note, in water cheers, maybe Anthony Noto is going to buy. Hopefully he does. If Anthony Noto buys more shares, I'm going to be buying more shares of SoFi, though. I will say that. So, once again, super duper closing note. I'll see you all tomorrow with a SoFi versus PayPal video. Keep it real. Let me know down below if you're an Adobe shareholder, and I'll see you guys later. Bye.